Read out the press release. The tower and related assets will be spun out from Reliance Infratel into an SPV to be 100% owned by Tillman Global and TPG. They'll utilize the proceeds of sale only to reduce their debt. The proposed transaction is subject to final DDN approval, and Tillman Global and TPG will also evaluate the purchase of Rel Comm's intercity and intra-city optic fiber assets in separate and independent transaction. I think Rima is also joining in now. She'll try and give us some more perspective on this. Rima, what do you make of this?
Well, this is something which has come largely in line with what the street was anticipating. In fact, just today, we were picking up that Tillman Global Holding as well as TPG had emerged front runners. The Fireland Capital was also in the reckoning. So this deal has come in line with expectations. The reason why the stock is correcting, though we don't know what the valuation is right now, the enterprise value. But let's try pulling up maybe a 2-week chart of Reliance Communication, and you can see that stock had actually gained from levels of 63, 65 thereabout to levels of 83. So today, what we've seen is profit taking to a long-awaited announcement. So let's try doing the intraday chart of a 10-day or a 14-day chart, and you can see the stock had already gained close to about 15 to 20% in the last few days. So this is the deal that we have. They are going to be selling their tower assets. Tower assets are Reliance Infratel. The buyer has been announced at Tillman Global Holding as well as TPG. These tower assets will be spun out. You make it into a separate SPV. The key critical details that we're awaiting, one will be on valuation. It should be around 21 to 22,000 crore rupees. So that is a figure that has been speculated by the market. So that is one detail. Also, I guess going by this, Reliance Communication will be selling 100% of its assets. So I'm just trying to go through that. Will they be selling 100% of their entire stake? I think so, yes. I think it will be completely sold. I think Reliance Communication will completely exit out of it because Tillman Global Holding will be owning 100% of that SPV. But Naveen Kulkarni of Phillip Capital joins in now. Hi Naveen, the news is finally out after many years. Your initial reaction?
See, again, it depends on what exactly they want to achieve by selling the towers. Reliance Communications has been reeling under significant debt, and that has hampered their capability in terms of expanding and also the go-to-market. So with this cash infusion, the financial leverage for the business reduces significantly, and probably they can focus more on network and 4G services. So that could be the strategy, I believe.
Okay, so their debt used to be close to 40,000 crore rupees. Now, while we do not know what the enterprise value is, but let's assume and go with what the street was working with for the tower business, that's say 22,000. Is that a case for re-rating of the stock? And secondly, they're also going to be selling their optic fiber cables. What should be the rough valuation we should expect on optic fiber?
Optic fiber cable, again, it's again a very difficult question to gauge because it depends a lot on how much intra-city optic fiber cable they have. If it's intercity, then it will more or less go at the replacement value. So that may not fetch a huge number. But if it is intra-city optic fiber cable, then the valuation will be significant. That aspect, I don't think they have too much, the intra-city optic fiber cable.
Okay. And secondly, do you believe that the stock has more to go from levels of 83 with this kind of a debt reduction that they've managed in one stroke, halving it nearly?
Again, I would say there are two parts to it. One is there will be debt reduction, but it also adds to the operating leverage. So one thing comes on the financial leverage comes down, whereas the operating leverage moves up because you have to pay rents on the towers that you will be start. Because it's that kind of a deal, right? You sell the towers and you again lease back the towers because without towers you don't have a business case. I think the kicker for the, I would say the stock price can come in from what kind of spectrum deals that they are able to forge. The recent deal on Videocon was a significant, I would say, happened at a significant valuation. If they are able to sell, or if they think of selling their 800 megahertz to Reliance Jio at some point in time through some spectrum trading arrangement, I think that monetization can be even more significant than the number that we are talking at this point in time.
Okay. Of course, we'll wait that detail with Rel Jio, but just before that, what we're picking up from our sources is that this deal could be valued at 22,000 crore rupees, and they're also likely to sell their fiber business for around 6,000 crore rupees. So net, I guess we're staring at 28,000 crore rupees, but this is what we're picking up from our sources. Nitin Soni of Fitch Rating also joins in now. Hi, Nitin. Again, what would your rating be on Reliance Communication, and is there a case to upgrade your rating based on this tower deal?
Yeah, thanks for having me on the show. So we have a BB minus rating on Reliance Communication with a stable outlook, but the ratings have a low ratings headroom so far, given that it has about $6 billion of net debt. So this deal primarily will be a sale and leaseback transaction, and we will be capitalizing the rental which RCom will be paying to the the new tower entity which it will demerge into. We'll have to see, because what kind of money they actually get and use that money to repay their part of their debt. But if the net debt to EBITDA comes down to below 4 times as a result of this transaction, then it will kind of strengthen their ratings and will open up the scope for a rating upgrade. But so far, I mean, it's difficult to comment how much they are selling. Are they selling 1% or 90% of this tower entity, and difficult to comment for a rating upgrade.
Okay, but let's work with both the scenarios. Let's assume they're selling their entire stake. Then how much the net to debt equity would it come down? Would it then go below 4x? And secondly, if they were selling a 51% stake, I'm guessing it would not go down. But assuming if they've sold 100% of their stake, then would you consider raising your rating from BB minus? And the net debt to equity goes below 4x?
So we look at the net debt to EBITDA, right? So
right, net debt to EBITDA.
That's close to $1.2 billion, and net debt today is $6 billion. So if they sell this entity and the valuation is around 22,000 crores, which is about $3 billion. So if they sell 51%, they get 1.5 and reduce their net debt to 4.5, which means they're still around 4 times of net debt to EBITDA. And then you also have to add back the lease which RCom is going to pay. So it's only strengthening the rating at BB minus for this company, and I think the scope of an rating upgrade is far away.
Okay. One more question. Because this will be a sale and a leaseback transaction, okay, for the benefit of our viewers, since the company will be selling its towers, it still needs towers for its operations. So basically, they will be renting it out from the new owners of the towers, which is from Tillman Global Holding. So when you rent it out, your EBITDA would come down. So hence your margins will get negatively affected. So your interest will come down, but your EBITDA will also come down, which basically means your margins will come down. So in that context, Nitin, how much do you think the margins would come down roughly? Reliance Communications operating margins used to be around 33%. What could be the impact?
Yeah, so see, I mean, you pay a telecom company in this market is about 20,000 to 25,000 per month, and this company has about 45,000 odd towers. So if you calculate that amount, would may come to about $300 million or so. So your EBITDA margin will come down to maybe 27, 28%, or maybe lower than that. So it all depends how much, what kind of rentals on an average RCom is going to pay. So these transactions are always structured in a manner that how much money you are getting as a cash upfront from the sale, and on that basis, the lease rental is negotiated. So there is no standard for
Sure.
that these negotiations, right?
Okay, Nitin, just stay on with us. what we're picking up, what the press release says, that the parties have only entered into an exclusive agreement. This is a non-binding term sheet that they've signed, and these exclusivity agreements are valid till the 15th of January 2016. The proposed transaction is still subject to a final due diligence, definitive documentation, applicable regulatory and other approvals. So there is no certainty that a transaction will result. They will make further announcement at an appropriate stage. So as of now, this is only a non-binding term sheet signed between the two entities, Reliance Communication as well as Tillman Global Holding. And they've entered into an exclusivity agreement which is valid till the 15th of January 2016. So that is also another important update that we'd like to pick up. The stock, by the way, has been coming off. It's now down close a little more than 2%.
All right. Do we also have Naveen with us on the line? Hi, Naveen. So you've heard a lot of the reactions that are also coming in. Would this in any way now alter your long-term take on the stock?
Not really. So that's what. See, the valuation at which the deal is probably happening would be in the range of around, I would believe, around 4.5 million rupees. Right, for 45,000 or 4.5 million rupees. So that's pretty much the value that per tower should fetch. So it's not a significant upside to the valuation. So to give you an example, Bharti Infratel, the EV per tower is around 8.5 million. So that's a significant premium to the kind of deals which are happening in the market. So it doesn't add too much in terms of valuations. But as I was saying earlier also, there are other assets that Reliance Communications has, so which if it is able to monetize, then there could be further upside to the value of the company.
Okay. Naveen, what could be the extent of the margin impact because of the sale and leaseback agreement?
Yeah, it's difficult to quote, but let's say that if we look at typically in the market, operators pay a rent of around 35,000 odd rupees per month, between 35 and 40,000 odd rupees per tower on a monthly basis. So I would say that on a quarterly basis, if all the 45,000 towers are leased, so we could be looking at an impact of roughly around 400 to 500 crores in terms of EBITDA coming down. So some bit of depreciation gets converted into the rental cost. So that, I think, from an EBITDA margin perspective, the margins could come down by around 700 odd basis points, I believe.
700 basis points, you're saying from margins of around 33 odd %, it could come down to 26% thereabout?
Yeah, because what also happens is the depreciation number also comes down, right? So from an EBIT perspective, there could be an impact of around, say, 300, 400 basis points. It's difficult. I'll have to work out the exact numbers based on what rentals that they start paying. But EBITDA number should roughly come down by 700, 800 basis points, if not more.
I think what we can take away is that the margin impact is going to be quite significant, perhaps more than what the street was also anticipating. Naveen, they've also made a statement that, this is just a non-binding MOU or a non-binding term sheet. They've only entered into exclusive agreement, which is valid till the 15th of January 2016. Would you take that statement with a pinch of salt, or do you believe it's largely a done deal because of the kind of media release they've come out with?
Yeah, see, most of the times these things would be a non-binding agreement because you have to do the due diligence of actual physical assets which are in place, right? So the quoted assets, and they will do a proper due diligence in terms of the condition of the towers, the condition of the gensets which are there, and based on that, there could be further revisions in the valuation. So these aspects will, and of course, you need the regulatory approvals and other aspects, and there could be tax implications. So all these things take a little bit of time. So till that point, I think there could always be cases where two parties may not agree to go ahead with the deal if something major comes up. So I think I don't see that to be, I would say, having an impact, but it's pretty much a standard clause in an agreement, I would say.
Okay. What will be the EPS impact? Because on one hand, you're saying that the EBITDA could come down by close to about 700 basis points roughly, but interest costs would also be substantially lower. So net-net, at the profit level, EPS level, what could be the benefit to Reliance Communication? Would it at least, if not change your rating on the stock, would it at least result in EPS changes or upgrades?
Yeah. From an EPS perspective, the deal could be EPS accretive. That's a possibility because there will be savings on interest costs as well as there will be savings on depreciation costs. So from that perspective, I would be looking at some improvement in the earnings number.
Any rough calculation of what it could be?
On the earnings?
Yes.
It's again a difficult number to work out till we know the rental that the company would be paying. So that is the whole determining factor.
Naveen, just stay on. We are also joined by Gaurang Shah. He was talking to my colleagues Samira and Nigel earlier. Gaurang, would you like to comment on Reliance Communication? And does this warrant a re-look at the stock? Should people, be interested in buying it now that they've moved finally on their deleveraging plans?
Well, Rima, honestly, as Naveen was referring to, the outgoing form of lease rental is something that one needs to really have in place to work out all the back of the end calculation. And given the fact, and as you were rightly mentioning a while back, 10-day, 14-day moving averages, I think the news was expected and maybe the market had a little bit of sense of this development, and hence why after the news you're seeing the stock correct. Even if you look at the earnings, I would say that, as a disclosure again, Rima, we do have positive coverage on, if you ask me where to invest in cellular service provider space, then we would prefer names like Bharti, Airtel and Idea Cellular. And debt has always been a big problem for ADAG group companies, and it is not only restricted to Reliance Comm. I think you look at Reliance Power, you look at Reliance Infra and other companies, then there's a huge debt problem. But I would say that if I've given a choice, I would prefer Bharti, Airtel and Idea Cellular. As a disclosure, we do have positive coverage over there.
All right. Thanks so much, Gaurang. Thanks, Naveen. Thanks, Nitin. And thanks, Amit, for joining in today and giving us your views on that entire deal. But Rima, let's wind this conversation down now. Over to you. Just give us a summary of this entire deal.
Reliance Communication, non-binding MOU or term sheet with Tillman Global as well as TPG. Enterprise value, according to sources, 22,000 crore rupees. Also evaluating the sale of their intercity and intracity optic fiber assets, which we're picking up from our sources, seems to be valued at close to about 6,000 crore rupees. This is big debt reduction for the company from debt of close to 40,000 crore rupees. If you add 22,000 plus 6,000, your debt could come down by nearly 28,000 crore rupees. So that's a big positive. However, on the flip side, their margins will be under pressure if they sell their tower assets because of the sale and leaseback agreement. But net, according to our analysts, it should be an EPS accretive. The stock is seeing profit taking because of the kind of run-up prior to this announcement.
All right.